All right, so rates, everybody's bugging the heck out of me, wanting to know what I think. So here's the deal, the inflation's still there. So if the banking settles down, that's still going to be the driver. So I don't know what's going to happen at this next meeting, but CPI was still at 6, so it's still not subsiding. We had touched 7% on rates before the banking crisis hit. And Silicon Valley, from what I understand, they had their cash tied into other assets. You can't just liquidate like that. For example, treasuries, where they bought it at $100 and maybe sold it at 70 in order to generate cash for people who are withdrawing money. So a lot of the tech companies were withdrawing money because with inflation, they needed to put their money elsewhere to make larger returns. So inflation did cause the problems with the banks. Credit Suisse just came out today with another issue, so it's helping rates. So I'm actually hoping the banking settles down and we get to just fighting inflation. We can get this thing behind us. But any questions, let me know. And we're just going to have to watch the tug of war here over the next couple weeks. Have a great week. I can be reached at 720-617-7720.